All right, let's move on and put the spotlight on PNB Gilts. Vikas Goel, MD of PNB Gilts, is joining us now. There's a very big story or news development which has happened. Bloomberg has proposed Indian bonds also to be including in their EM index. Mr. Goyal, good afternoon. Thank you so much for joining us. You've been dealing with the bond market for a very long time. How meaningful, if you could help our viewers understand, how meaningful is this? Experts on the street believe that the Indian debt market could see, incremental inflows from the FII side due to this. What are your thoughts?
Well, thank you for having me on the show. On the Bloomberg EM local currency index inclusion, in terms of flows, actually, the index is pretty small, about $30 billion worth of funds track it. So that means, and the implication for us in terms of weightage in the index is 7%. So about $2 billion additional will come in. So that amount is fairly small. So that is not what is important, but the signaling value of this inclusion is important. Essentially, the signal is that we can look to be included in the flagship index, Bloomberg Global Aggregate, maybe a year down the road if everything goes well in the next year or so. So the proposed inclusion is from September onwards, over 5 months. Like I said, the amount is small, but the signal is good. So domino effect is at play. JP Morgan went first. Bloomberg is following. Hopefully, we will get included in the flagship also a year down the road. In March, I think Russell is due. So there will be pressure on Russell to include us. That will be good news in terms of flows. That again will be in excess of $10 billion if that inclusion happens. So essentially, it is just a glide path, and it just shows the confidence which the global capital markets is reposing in Indian debt markets in terms of the structure, the depth, and the width of the market. And this is just going to hopefully continue.
Sure. No point taken that it's a glide path, and probably will be included in a lot more indices as well, right, like this. But Mr. Goel, the question is, what does it mean for you in terms of business opportunity? How do you see the volumes panning out from here on? And for your growth prospects, what do you pencil in for the next 2 to 3 years?
Okay. I think we had this discussion when JP Morgan happened, and the same things apply. So there is obviously benefit both directly and indirectly. Directly in terms of the fact that now with that FX license which we have, we may deal with some of these new investors which come into the market. Indirectly, new investors come in, both active as well as passive. Market widens and deepens, and that is good news for entrenched players like us, existing players like us. So we will have more counterparties to deal with, larger amounts to trade. So indirectly, obviously, it is beneficial for us. Overall, obviously, the demand supply gets skewed in favor of demand for the time being, assuming that supply remains more or less constant, which means yields will come down, which means prices will go up. That also is obviously good news for us.
So that part, I want to scratch that part a little more. You expect yields to eventually slide lower here in India? To what levels over the next few months?
Okay, that's an interesting question. So along with, there are two positive factors in favor of the interest rate scenario now reversing. One is obviously the demand coming through index inclusion. This is, and hopefully, like I said, maybe Russell also may reconsider and include us. So obviously these flows will accelerate. Apart from the passive flows, around the passive flows, you may have noticed that active flows have already started picking up. So overall, obviously, demand will go up going into the actual index inclusion. Second thing, and maybe more important, is the monetary policy pivot. Looks like Fed is going to maybe pivot as early as March is what the market is expecting. I think I'm of a view that Reserve Bank may follow in the second quarter of the next financial year, maybe lag of 3 to 6 months. So we are going to see interest rate cycle turn. Obviously, that is favorable for people like us.
Okay, Mr. Goyal.